Good morning students, this is C. Aditya. Today onwards I am going to provide CA final auditing classes in my YouTube channel. My YouTube channel is CA Aditya Pulivarti. I have recently qualified as a chartered accountant and doing my practice. From past 3 to 4 trends, I have observed that the auditing paper is coming very hard, and I have observed that the most of the questions are coming from the ICA study material. So I am telling to all the CA final auditing students that please refer to ICA study material at least once before going to the examination of auditing. So that is why I am also providing the auditing lectures from you ICA study material only. I can prepare my own book, but ICA study material is the godfather for all the other books. So that is why I am telling the classes from the auditing ICA study material. So you also should study at least once ICA study material, though, so that if the paper even comes very hard, you can crack the examination and you can get even an exemption in the case of paper becomes very hard or toughest. Okay, let's start the video, students. Today I am going to discuss about first chapter from my perspective of sequence, that is audit reports. Okay students, let's start the video. See, introduction. See, when we go for an audit, see students, assume you were an auditor and have went for the audit. Introduction to audit report. In the case of introduction to audit report, first you have gone to an audit, then conduct the audit. After the doing the audit, what will you give? What will you give? That is, you should give an audit report. Based on the audit report, the users of financial statements will rely that the auditor has given the audit report and they will invest in the company. That is why the auditor should take responsibility, because large number of stakeholders are likely to place reliance on the financial statements. Based on the audit report given by the auditor only, large number of stakeholders are likely to place a reliance. That is why the audit report is very important. So the auditor has to take careful, vigilant and objective in the matter of preparation of the report. Okay students, this is what the introduction relating to the audit report. Let's see essay 700, forming an opinion and reporting on the financial statements. An auditor in forming an opinion shall see the audit evidence obtained. The audit evidence obtained and the conclusion reached are exactly the same, and if they are same, then the auditor will provide a opinion. Okay, and the audit report should be in written format. That is why students, to form an opinion on the financial statements, the auditor will evaluate the conclusions drawn with the audit evidence obtained. Then only the auditor can give the opinion. And the audit report should be also in a written format. See students, forming an opinion on the financial statements. For forming an opinion on the financial statements, the financial statements should be in all material aspects in accordance with applicable financial reporting framework. That is, the financial statements should be as per applicable financial reporting framework, and they should be free from material misstatements, whether due to fraud or error. Then only the auditor can give a true and fair view of opinion. Okay students, for forming an opinion on financial statements, the auditor shall see that financial statements are prepared in accordance with applicable financial reporting framework, and the financial statements are free from material misstatements due to fraud and error. Then only the auditor can give an opinion on the financial statements. See, basic elements of audit report. See, in an audit report, the auditor will provide the information in a written format. First one, title, addressee, opinion, basis for opinion, management responsibility, auditor's responsibility, other reporting responsibility, location of description of auditor's responsibility, signature, place and date. Let's discuss them in brief. Okay, students. See, title. The audit report shall always indicate that it is an independent auditor's report, because we, the auditor, going to a client, and we should be independent. That is why we are providing a independent auditor's report. See, example students, independent auditor's report distinguish the auditor's independence report from report issued by others. Okay. Addressee. Addressee means we are providing audit report. That is, the auditor is providing the audit report. To whom it is providing? The audit report shall be addressed to whom? That is what is providing the addressee report. See, the audit report shall be addressed as required by the circumstances of the engagement. In the cases of general purpose financial statements, they are provided to the members of the company, and in the case of special purpose financial statements, they are provided to the board of directors. That is, based on the circumstances, they are provided to the members of the company, or they are provided to the board of directors, as the case may be. See, auditor's opinion. In the auditor's opinion paragraph, the auditor will provide the following information. Identify the entity which the financial statements are audited. That is, if you audit the Infosys company, then provide that we have audited the Infosys company. That is what specified. Identify the entity means Infosys, Wipro, or Reliance, whatever may be the company we have audited, that we have to provide here. State that the financial statements has been audited. If you audit the Infosys company, then we have to provide that the financial statements of the Infosys company are being audited by the said auditor. Okay. Identify the title of each statements comprising the financial statements. See, we have to provide the title of each statements comprising the financial statements. Means the title of each statement means profit and loss account, cash flow statements, balance sheet, notes to accounts, statement of changes in equity. What is meant by balance sheet, profit and loss account, cash flow statements, notes to accounts, statement of changes in equity? These five are considered as statements of financial comprising the financial statements. Each statement comprising the financial statements, there are 5 types. Okay, we have to provide them in the auditor's report in opinion paragraph. Next, we should provide the notes to accounts and any significant accounting policies also, which occurred during the current period. Okay, we have to provide the date and period covering by the each financial statements. That is, if you are covering from 31st March 2020-21, then you should provide 31st March balance sheet as on 31st March 2020-21. That is what saying about this paragraph, students. Let's see. Basis for opinion paragraph. In the case of basis for opinion paragraph section, we will provide the following information. That is, we have conducted the audit in accordance with standards on auditing. That is, the auditor has conducted the audit in accordance with standards on auditing. Next, make reference to the section in the audit report describing the auditor's responsibility. In the auditor's report, that is in the basis for opinion paragraph, the auditor should provide a section about the describing of auditor's responsibility by way of separate section. Okay, indicate that the auditor has conducted the audit with requirements of ethical requirements. That is, the auditor has conducted the audit in accordance with and standards on auditing. That is, the first point is with standards on auditing, and third point discuss that we have conducted the audit in accordance with ethical requirements of ICAI. We should, when we are going for the audit, we should conduct the audit as per the code of ethics issued by the ICAI. Then only we can give a independent auditor's opinion. That is why code of ethics says we are following code of ethics as per issued by the ICAI. Then we can say that we have given independent auditor's opinion. State that we believe that the evidence obtained by the auditor is sufficient and appropriate to provide basis for auditor's opinion. That is why, students, we have obtained opinion. It is sufficient and appropriate to provide the basis for opinion. For opinion, we have taken an evidence and it is appropriate. Then only we can provide the opinion. Next, going concern. In the case of going concern, use of going concern is use of going concern basis of accounting is inappropriate. Then auditor will use adverse opinion. Going concern means we think that the company is continuing in the future without liquidation, or company has uncertainty. That is why use of going concern basis of accounting is inappropriate. That is, the management has done the accounting as per going concern, but it is not appropriate. In such circumstances, we will give adverse opinion. Okay, students. Next, use of going concern basis of accounting is appropriate, but material uncertainty exists. Then when a disclosure is provided, then the auditor will give unmodified opinion and provide a section that material uncertainty on going concern by way of paragraph below the basis for auditor's opinion paragraph. That is, students, what this is discussing is use of going concern basis of accounting is appropriate and material uncertainty exists. Then the auditor will give unmodified opinion but provide material uncertainty on going concern paragraph below the basis for auditor's opinion paragraph. That is what, students, unmodified opinion will be given, and separate section material uncertainty on going concern, it is provided below the basis for auditor's opinion paragraph. Next, adequate disclosure of material uncertainty is not made. That is, use of going concern is appropriate and material uncertainty is exist, but adequate disclosure is not made in the financial statements. Then auditor will give qualified opinion or adverse opinion and mention the opinion on basis for opinion paragraph. Okay, students, management unwilling to make or extend its assessment. In the case of management is unwilling to make the assessment of material uncertainty on going concern, then the auditor will see implications in audit report whether to give adverse opinion or qualified opinion. Based on the circumstances, on the implication of the audit report, he will give the appropriate report. Okay, students. Next, we will see the illustration. See, CA Samir is the statutory audit of Tramfarm Limited for the financial year 2020-2021. While conducting the audit, CA Samir decided to issue an unmodified opinion. True, he also concluded that a material uncertainty exists. See, students, material uncertainty exists with respect to the company's ability to continue as a going concern of a pending litigation relating to labor laws. He is of the view that the company has made appropriate disclosure. That is, students, see, appropriate disclosure with relating to material uncertainty has been provided. So, in the case of where material uncertainty exists with respect to going concern and an appropriate disclosure is made, then the auditor will give unmodified opinion with a section that material uncertainty is exist and is provided below the basis for opinion paragraph. Let's see the answer, students. Material uncertainty relating to going concern. We draw the user attention of note 10 in the financial statements, which indicates that the outcome of a litigation on account of labor laws is pending in case of company during the year 31st March 2020-21. As stated in note number 11, these events or conditions indicates that material uncertainty exists that may cast significant doubt on the company's ability to continue as a going concern. Our opinion is not modified in respect of this matter because material uncertainty is exist, but adequate disclosure is made. See, appropriate disclosure with respect to such pending is made in the notes to accounts annexed to the financial statements. That is why the auditor will give unmodified opinion. That is what provided. Our opinion is not modified. That is, we will give unmodified opinion. That is what, students. Next, key audit matters. Okay, students, key audit matters are those matters which in the auditor's professional judgment, one of the most significant matters during the audit of financial statements of the current period. In the current period, the auditor has conducted the audit, and according to the auditor's professional judgment, these matters are some of the most significant. They are selected from the matters communicated with those charged with governance. The auditor will communicate matters with those charged with governance. From those charged with governance, where the auditor has communicated, from them he choose some of the matters as most significant, which auditor has conducted the audit during the current period. See students, key audit matters are those matters which in the auditor's professional judgment were of the most significant in the audit of financial statements of the current period. Key audit matters are selected from matters communicated with those charged with governance. See students, the auditor will communicate with those charged with governance a lot of matters. From them, the auditor will select some of the matters that, according to his professional judgment, these matters are most significant. That is why they are provided in the key audit matter paragraph. Let's discuss them briefly, students. I say 7 not 1. See students, communicating key audit matters in the independent auditor's report. Key audit matters are those matters that in the auditor's professional judgment were of the most significant during the audit of financial statements of the current period. These matters are selected. First we should read this only. Afterward this. Key audit matters are selected from matters communicated with those charged with governance. From these matters, the auditor will see these matters, some of them are from the matters communicated with those charged with governance. The auditor will see some of the matters are most significant during the audit of financial statements of the current period. Purpose of communicating key audit matters. Objective or purpose of communicating key audit matters. It will enhance the communication value of the audit report because we are providing greater transparency about the audit that was performed. See students, the auditor is providing the information, that is the matters of most significant during the audit of current period according to the professional judgment. The auditor is providing most significant matters according to his professional judgment during the audit of current period. The matter is provided in the key audit matter paragraph. That is, the key audit matter paragraph is provided below the material uncertainty on going concern paragraph. See students, the key audit matter paragraph is provided below material uncertainty on going concern paragraph. That is what students. By way of key audit matter paragraph, the auditor will communicate the most significant matters. The users also can understand that these matters are most significant according to the professional judgment of the auditor during the audit of financial statements of the current period. These two are the purposes communicating, that is these two are the purposes that the key audit matters communicated by the auditor. Next, communicating key audit matters is not a substitute. That is, even though you have provided the key audit matters in the audit report by way of key audit matter, that is what students. Even though you have provided separately key audit matter paragraph, these four information you should provide separately. That is, you should provide these four information separately, even though you have provided them in the key audit matter paragraph. That is what describing here. Key audit matters, communicating key audit matters is not a in the audit report is not a substitute for material uncertainty on going concern. If any matter relating to the going concern, material uncertainty relating to the going concern, then we should provide in matters uncertainty relating to going concern paragraph below the basis for opinion paragraph. That is what students. Any matter relating to material uncertainty on going concern, then it is not a substitute. Even though if you provide in the key audit matter paragraph, we have to provide them separately under material uncertainty on going concern paragraph. Okay students, next, not a substitute for disclosure required in accordance with in the financial statements in accordance with applicable financial reporting framework. See students, where a disclosure required as per applicable financial reporting framework in financial statements, then the auditor, even though provided in the key audit matter paragraph, there are required to be disclosure in the financial statements. See students, next, where a matter required to be modification of opinion, where a matter required modification of opinion, then we should provide the matter in the basis for modification of opinion paragraph. Even though we provided in the key audit matter paragraph, but we should provide them separately in the basis for modification of opinion paragraph, students, in the audit report. Next, a separate opinion on individual matters. So even though we provided in the key audit matters paragraph relating to separate opinion on individual matters, we should provide separately the separate opinion on individual matters. Okay students, let's see. Determining key audit matters. We should have a factor of determining, that is, what are the factors we should see. These matters are considered as key audit matters. According to the professional judgment, the auditor thinks that these matters are most significant. For the purpose of most significant, the auditor will see these factors. Areas of high assessed risk of material misstatements are significant misstatements identified in accordance with SA 315. See students, there are high assessed risk. While doing the audit, the auditor thinks that these matters are most significant risk and high assessed risk. As per SA 315, he has identified. And significant auditor judgment is required, that is, significant auditor judgment is required in the cases where judgment involved by the management, including accounting estimate having high material uncertainty. That is, the auditor judgment is significant because the management has made a significant judgment including the accounting estimates. The management has made accounting estimate judgment also, which are having high estimate uncertainty. In this case also, the auditor will think that there is a significant matters required to be reported in the audit report. That is why he should consider this factor also for the purpose of key audit matters. The effect on audit. Events or transactions which occur during the current financial year which have a significant on the audit. During the current year, any transaction or event occurred and it have a significant effect on the audit of financial statements, then that also auditor should provide in the key audit matter paragraph. So these three are to be considered by the auditor. These three are factors for the purpose of key audit matters. If any matter having below quality, then the auditor shall treat them as key audit matters and provide in the key audit matter paragraph below the material uncertainty on going concern paragraph in the audit report. See, illustration students. The following illustration presents in the audit report. The auditor has determined that there are no key audit matters to communicate. See students, when there is no key audit matter paragraph, no key audit matter, then the auditor provide in the key audit matter that there is no key audit matter to be communicated in the audit report. That is, except for the material discrepancies in the basis for qualified opinion section or material uncertainty relating to the going concern, we have determined, that is, the auditor has determined that there are no key audit matters to communicate in our report. That is what the auditor should provide. Even though there is no key audit matter, the auditor shall provide in the key audit matter paragraph that we have determined that there are no key audit matter to communicate in the audit report. Okay students, let's discuss SS 705, modification of opinion in the independent auditor's opinion. See students, modification of opinion in the independent auditor's report. There are three types of auditor's opinion, that is, qualified opinion, adverse opinion, and disclaimer of opinion. First, right students, what I am going to tell you is, please write in the notes what I am going to tell you. See students, circumstances where the auditor will issue unqualified opinion. Circumstances where the auditor will issue unqualified opinion. Please write in notes. Students, please write in notes. Students, circumstances where the auditor issues unqualified opinion. the auditor concludes based on the sufficient and appropriate audit evidence. The auditor concludes based on the sufficient and appropriate audit evidence that financial statements are free from material misstatements and the financial statements are in accordance with applicable financial reporting framework. Then the auditor will issue unmodified opinion or unqualified opinion. That is what students. What is students? When the auditor concludes based on the sufficient appropriate audit evidence obtained that the financial statements are free from material misstatements and the financial statements are prepared as per applicable financial reporting framework, then the auditor will issue unqualified opinion or unmodified opinion. Circumstances where the auditor will issue modified opinion, the circumstances where before I have told circumstances where the auditor will issue unmodified opinion. Now circumstances where the auditor will issue modification of opinion in the independent auditor's report. See students, the auditor has obtained sufficient and appropriate audit evidence and concludes that the financial statements contains material misstatements and are this is what the auditor concludes that based on the sufficient and appropriate audit evidence concludes that the financial statements are not free from material misstatements. That is, the financial statements contains material misstatements, or the auditor is unable to obtain. The auditor is unable to obtain sufficient and appropriate audit evidence to conclude that financial statements does not contain material misstatements. That is what students. First one is the auditor is obtained sufficient and appropriate audit evidence and conclude that financial statements contains material misstatements. The second point is the auditor is unable to obtain sufficient and appropriate audit evidence to conclude that financial statements does not contain material misstatements. See students, circumstances determining the type of modification for the auditor's opinion. Circumstances where qualified opinion will be given. The auditor will give qualified opinion in the following cases. The auditor has obtained sufficient and appropriate audit evidence and concluded that the financial statements are not free from material misstatements and there are material but not pervasive either individually or in aggregate. That is, the auditor is able to obtain sufficient and appropriate audit evidence, but the financial statements contains material misstatements which are material but not pervasive to the financial statements. And the second point is the auditor is unable to obtain sufficient and appropriate audit evidence and the auditor concludes that the possible effect, that is the possible effect of undetected misstatements, because the auditor is unable to obtain sufficient and appropriate audit evidence, that is why they are called as undetected misstatements. If auditor is unable to obtain sufficient and appropriate audit evidence, then he cannot detect misstatements. So he is providing, that is why he is providing undetected misstatements. When the auditor is unable to obtain sufficient and appropriate audit evidence, then the auditor concludes that the possible effect of undetected misstatements which could be material but not pervasive, then the auditor will give qualified opinion. Okay students, let's see the illustration. XYZ Limited is a company engaged in the manufacture of cranes. CA Sudhir is the statutory auditor of the company for the financial year 2020-2021. The company has taken long-term funding for fixed capital requirement and short-term funding for its working capital requirements. During the course of audit, CA Sudhir found that the company financial arrangements are about to expire. That is what students. CA Sudhir found that the company's financial arrangements are about to expire and the company is unable to renegotiate or obtain the replacement financing. As such, the company may be unable to realize its assets and discharge its liabilities in the normal course of business. Notes to accounts annexed to the financial statements discuss the magnitude of financial arrangements, the the expiration and the total financial arrangements. However, the auditor does not include the discussion of impact or the availability of refinancing. Thus, the financial statements and the notes to accounts not fully disclose the fact. What kind of auditor's opinion will you given in this case in XYZ Limited? See students, in the present situation, the auditor has obtained financial arrangements and they are fully exacted, that is the amount is fully over. So the auditor is concluding that in the present case the financial arrangements are about to expire and the auditor is unable to renegotiate, that is the company is unable to renegotiate or obtain another financing, and the company is unable to realize, assess and discharge its liabilities in the normal course of business, but provided in the notes to accounts by way of annexed to the financial statements. See students, it is a case of material uncertainty relating to the going concern. We should provide them in the material uncertainty relating to the going concern paragraph. In this case, the auditor is able to obtain, that is the auditor is able to obtain sufficient and appropriate audit evidence, but disclosure is not adequate. So there are material but not pervasive to the financial statement. This because in the case of notes to accounts annexed to the financial statements, they are discussing the magnitude of the financial arrangement, the expiration and the total financial arrangements. That is why we will go provide qualified opinion. See students, we should express qualified opinion as the effect of financial arrangement is inadequate disclosure of material but not pervasive to the financial statements. See, in the present case, XYZ Limited is unable to renegotiate or obtain the replacement financing for its long-term and short-term funding requirement. This situation indicates the existence of material uncertainty that may cast significant doubt on the company's ability to continue as a going concern, and thereby XYZ unable to realize its assets and discharge its liabilities in the normal course. Further, the financial statements of XYZ Limited does not disclose this fact adequately. See students, in the present case, the auditor has to provide that the inadequate disclosure which is material but not pervasive to the financial statements. That is why the auditor will give qualified opinion. In the qualified opinion paragraph, the auditor will provide the qualified opinion. In the case of adverse opinion, the auditor will provide adverse opinion. In the case of disclaimer of opinion, the auditor will give disclaimer opinion. This was student. In the case of basis for qualified opinion, the auditor will provide a brief discussion about why the company is providing qualified opinion. In this paragraph, the auditor will describe in the audit report basis for opinion paragraph that why auditor is providing qualified opinion. See students, company financial arrangements are about to expire and the company has unable to conclude renegotiation or obtain replaced financing. In this situation, the material uncertainty exists and the company ability to continue as a going concern is doubt. The financial statements are not disclosed adequately. In the case of adverse opinion, see next students, adverse opinion. The auditor will give an adverse opinion in the case where the auditor is able to obtain sufficient and appropriate audit evidence and conclude that the financial statements contains material misstatements, that is the financial statements contains misstatements either individually or aggregate which are material and pervasive to the financial statements. That is what students, auditor is able to obtain sufficient and appropriate audit evidence, but the auditor concludes that based on the sufficient and appropriate audit evidence that financial statements contain misstatements which are material and pervasive to the financial statements. In such case, the auditor will issue adverse opinion. See students, ABC Limited is a company engaged in the manufacture of iron and steel bars. PP and Associates are the statutory auditor of ABC Limited for the financial year 2020-2021. During the course of audit, CA Prakash, the engaging partner found that the company financial arrangement have expired and the amount outstanding was payable on 31 March 2021. The company has been unable to renegotiate or obtain replaced financing and is considering filing for bankruptcy. These events indicate that a material uncertainty about the going concern exists and the company is unable to realize its assets and the company has not disclosed even in notes to accounts or no adequate disclosure or full undisclosed. See, in the present situation, the company is unable to renegotiate for refinancing and the company is going to apply for bankruptcy and there is a material uncertainty on going concern. So, they may have a significant effect on the financial statements. So, the auditor is able to obtain a sufficient and appropriate audit evidence in the above case and there are material and pervasive to the financial statements. In such case, the auditor will issue adverse opinion. Okay, students. See, the omission, because the effect of financial statements of such omission. See, students, in the present case, the auditor has not disclosed the fact of not refinancing, that is, no negotiation or material uncertainty or filing of bankruptcy. These three information has been not provided by the company in the financial statements or notes to accounts. Then the omission will have a significant effect on the financial statements. In such case, the auditor will issue adverse of opinion. In the opinion paragraph, the auditor will provide adverse opinion. Okay. In the basis for opinion paragraph, the auditor will provide basis for adverse opinion. Okay. In basis for adverse opinion, the auditor will provide information, that is full explanation why the auditor is giving adverse opinion. Okay. Let's discuss disclaimer of opinion. In the case of disclaimer of opinion, the auditor concludes that when the auditor is unable to obtain sufficient and appropriate audit evidence, that is, the auditor is unable to obtain sufficient and appropriate audit evidence, and the auditor concludes that the possible effect of undetected misstatements, which could be material and pervasive, that is, undetected misstatements means the auditor is unable to obtain sufficient and appropriate audit evidence. In such case, there will be an undetected misstatements in the financial statements because the auditor is unable to obtain sufficient and appropriate audit evidence. That is why he cannot find misstatements. In such case, there will become undetected misstatements. So, the auditor is unable to obtain sufficient and appropriate audit evidence and the auditor concludes that the possible effect of undetected misstatements, either individually or in aggregate, which could be material and pervasive to the financial statements. In such case, the auditor will give disclaimer of opinion. Okay, students, let us see the illustration. We are engaged to audit the financial statements of ABC and Associates, which comprise the balance sheet as at 31st March 2000, the statements of profit and loss account and the statements of cash flow and the notes to accounts including summary of significant accounting policy. See, students, in the case of auditor's opinion relating to disclaimer, the auditor will not express an opinion. Please write in the notes, students. In the case of disclaimer of opinion, the auditor in the auditor's opinion paragraph will write disclaimer of opinion and will not express an opinion. See, students, the auditor will not express an opinion accomplishing the financial statements of the entity. That is, the auditor will not express an opinion in the case of disclaimer of opinion. Okay. In the basis for opinion paragraph, the auditor will write basis for disclaimer of opinion and the auditor will say give brief discussion why the auditor is giving basis for disclaimer of opinion. MNO Limited is a power generation company having its plants in the northeastern state of the country for the financial year 2020-2021. Messrs. RPRT and Associates are the statutory auditors of the company. During the course of audit, the audit team was unable to obtain, see, students, the audit team was unable to obtain sufficient and appropriate audit evidence about single element on the consolidated financial statements. This is the auditor was unable to obtain sufficient appropriate audit evidence about the share of the going concern investment in XYZ Limited, represents 90% of the entity's net assets. See students, MNO Limited is a company, has a joint venture, and the net assets of the company comprises 90% of the net assets in the XYZ, that is joint venture. Then the auditor has to obtain a sufficient and appropriate audit evidence regarding the share of MNO Limited in the total assets of the joint venture, that is in XYZ Limited. So in the case where the auditor is unable to obtain sufficient and appropriate audit evidence either in the standalone financial statements or in consolidated financial statements, the auditor will see whether there are material and pervasive. If there are material but not pervasive, then the auditor will give qualified opinion. But in the case of material and pervasive, the auditor will give disclaimer of opinion. In the present case, the MNO Limited has made an investment in the joint venture, and the share of assets, that is the net assets, represent 90% of the net assets by MNO Limited, but the individual assets of the share of the joint venture, that is the investment made by the MNO Limited in the joint venture, the auditor is not able to obtain the audit evidence. In such case, the auditor will give disclaimer of opinion, because the share of net assets, that is the fixed assets, the tangible assets, intangible assets, the investments, the bank balances, whatever may be, the auditor is unable to obtain audit evidence, then in such case they have a significant effect on the financial statements of the MNO Limited. In such case, the auditor will give disclaimer of opinion, as they have significant effects on the financial statements. See, Mrs. PRT and associates are unable to obtain sufficient and appropriate audit evidence information of joint venture investment over 90% of the assets. See, the auditor is unable to obtain sufficient and appropriate audit evidence relating to investment made by MNO Limited in the joint venture XYZ Limited. That is why the auditor will give disclaimer of opinion, because they have significant effect on the financial statements of MNO Limited. Okay students, in the case of disclaimer of opinion, the auditor will not express an opinion. In the cases where this basis for auditors expressing disclaimer of opinion, the auditor will explain the full information why he is giving disclaimer of opinion. Okay students, next, consequences of inability to obtain sufficient appropriate audit evidence due to management imposing limitation on scope after the auditor has accepted the engagement. See students, when the auditor has accepted the engagement, he should see all the conditions of Asset 210 agreeing to the auditor's engagement conditions. See students, after the auditor has accepted the engagement as per Asset 210, the management has imposed limitation, and by these limitation, the auditor is unable to obtain sufficient and appropriate audit evidence. Then in such case, after acceptance of engagement, the auditor will ask the management to remove the limitation so that he can get the sufficient and appropriate audit evidence. If the management has disobeyed, then he should go to the those charged with governance. Unless those charged with governance are same as management, that is those charged with governance and the management are same, then the auditor need not go to those charged with governance. Then he should see the alternate audit procedures, that is he should perform alternative audit procedures, whether he can get sufficient and appropriate audit evidence to conclude that whether the financial statements contains material misstatements either individually or aggregate or not. If the auditor is unable to obtain sufficient and appropriate audit evidence even after performing the alternative audit procedure, then the auditor will consider the implications in the audit report, that if the auditor issues adverse opinion, he can provide them in the auditor's opinion. See students, if the auditor concludes that possible effect of undetected misstatements which could be material but not pervasive, then the auditor will give. See, when the auditor concludes that management has imposed limitation, then he will not get any sufficient and appropriate audit evidence. In such cases, the auditor will see whether the undetected misstatements, the possible effect of undetected misstatements could be material but not pervasive. Then the auditor will issue qualified opinion. But in the case where the auditor is unable to issue qualified opinion, then the auditor will see whether disclaimer of opinion will be given. Then in such case, the auditor will withdraw from the engagement where practicable or applicable as per law. If auditor is unable to withdraw from the engagement because as it is not practicable or possible as per law, applicable laws, then the auditor will give disclaimer of opinion in the auditor's paragraph. Okay. Thank you students. Let's discuss in the next class. Please like, share and subscribe to my channel because it will help you for CA final auditing students for passing and getting the exemption. Thank you students. Please subscribe to my channel, CA Aditya Pulivarti channel, YouTube channel. Please. Thank you students.